The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to the show. Another great and excellent show. As always, we meet at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So as we said at the update, there's a few things. One of the easiest way to push the market is Apple, as it's in everything. And we had a bunch of people getting short Apple all through the week. Actually started last Friday. And this is a company that always has $200 billion laying around to buy back shares. So it's rare that they let it go very far unless there's a real problem. Anyway, we were talking in the den last night just before earnings came out at 4:30, and I was posting just how big the daily short numbers are. You can get those from FINRA. I just compile them and save them in a database. But they were in the 25% range. And for Apple, a company that does make a lot of money, but more importantly has its own cash and can screw you over about 5 ways to Sunday, I'm not a big fan of trying to short Apple during earnings. There, you can make some money. Is it what it used to be? Probably not. But piling on Apple, unless they really drop the chalupa, is problematic. Now, we put that against it's bonus time. The easiest way to screw everybody over and run the shorts and get the price to its highest level for the open on the 1st, or actually the close on the 31st, for bonus time. The actual bonuses for everybody on Wall Street are pretty much set on the close of the 31st. It tends to have a fairly good historical background of being pushed up to do that. Again, it's not their money. And, they may have another job by next year. So, it's hard to tell somebody they're doing something wrong when their check depends on it. We also have some other stuff that's just normal, and that is the last 2 days of the month, and the first 3 days of the month is fun buying. So if your bonus depends on it, why don't just throw all the money you can at it today and the 31st and worry about the rest next year? So you do have a thing where the entrances and exits are fairly narrow in a bear market, but it doesn't matter because we had a few things. They kept the market up to get an IPO out. Now they're kind of holding it up to get to bonus time. And then you have the normal fun buying. It's just very tough to get short during this time. You'd be much better off on next Wednesday or Thursday of looking for more downside if you think it's going to happen. Last night you had to think when you saw Amazon's earnings that we would have gone belly up this morning. But there was a lot of cash to put to work. And, while a day does not make the markets long term, it is very easy to be on the wrong side in a bear market to only have it come back and get you several times. So I wasn't being short. In fact, I was looking this morning at buying the first time. I was looking at the AAPU, which is the leveraged Apple ETF, which is 1.5 times. I kind of thought maybe they would hold the market down to 10 or 11 and then take off. But it looked right from the front, or right from the open, that there was no amount of money that these guys weren't willing to throw at the market to get it higher. And the easiest way to do on that was Apple. Anyway, AAPU is up 12%. I got into it. Unfortunately, as many times happen in the fog of war. No plan survives first contact with the enemy. Man, I was praying that they would hold this market down to about 11 and I'd be able to buy some calls on Apple. Well, that didn't happen. I did try the AAPU, and, is it a huge volume thing? No. But it did give me a little bit of leverage when I couldn't really didn't have an opportunity to buy the calls. I mean, it was like 950 and it was halfway there. It was 150 then, and it got to 155 on the numbers at 10 o'clock. If you missed that, housing starts were down about 10% from last year at this time, and that I think a lot of people in the market think that will make the Fed start to pause. And, let me see here. Fed. Calendar. Hang on a second here. I wanted to get it up. That's not it. Statements. Okay, yeah, it is November 1st and 2nd next week. So maybe we get a little bit of a pullback. But no, I need to update something here. Okay. Okay. Let's see here. Okay, got that. Just trying to do some housekeeping. Anyway, November 1st and 2nd, I see here that we've got that. So that is Tuesday and right? Tuesday and Wednesday. So I think they're trying to get way in front of that too. So I think a lot of this is just front loaded. Again, probably a little afraid that maybe he comes down on the hammer on the 2nd. So let's go ahead and drive the market up and kind of double dog dare them to do something bad. But if it's going to happen, my guess is going to be, if you're going to see weakness, it's probably going to be at least Tuesday, if not waiting and kind of holding the gun at his feet and telling him to dance on the 2nd. 877-927-6648. Email me at path@tfnn.com. Yesterday, I did get back to everybody. I'm sorry about that, but I had problems in the mail thing during the show, but I did answer everybody's questions after that. So get back to that. And see what else. We had a few questions. I think I answered everything. But that's it. Anyway, we're going to be going to the break here for a moment and just have a big day. Don't expect it to get really that much of a pullback. They're going to try to press this thing. My guess is they may get or try to hit it for another 50 or 60 points before we get into the close on the 31st. As I say, sell when you can and also cover when you can.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, the volume's good. It's not fantastic, but I'm not surprised. They're just going to keep the pressure on, I suspect, into Tuesday morning. Then maybe we'll see a little bit of action around the Fed calendar and see whether or not the numbers that we especially got this morning on the 10% housing start and sales drops and everything else has a little bit of effect on the Fed. My guess is not. I'm just surprised that they do anything 6 days before the election or 5 days. But, I get surprised easily these days. Yes, I've gone back and looked at it for years. I heard somebody tell me that, I want to say it was Wallenchuk, back in 2002 or 2001. But these guys have, there's a pretty good pop almost always around this time as they get ready for their bonus checks. That's only about 80% of them. A lot of the other bunch tend to get their closing dates on December 1st. So you also get a little bit of a pop there for the folks that don't get it on the closing price of October 31st. So, yeah, there's that's one of the easiest ones. Just go to the last day of the trading month of October, and look at the first couple or the last couple of days. It hardly ever goes down, and a lot of times it sees a lot of juice. And I think they do front run fund buying. Again, they're all in it together. You either hang together or hang apart, and don't want to be a social faux pas of selling into what is everybody else's bonus time. Anyway, 877-927-6648. Go ahead and email me. I do have that up and running today. For some reason, everything went to spam yesterday, so I fixed that. So I'm sorry about that. I did answer everybody's email after the show. Okay, so we've got some factors, and I'd call them organic factors in the market that push this little hump up. The question is whether or not we can find enough sand if the Fed does anything. But if they don't drop the Baby Ruth in the punch bowl on Wednesday, my guess is we're just going to stumble up. And kind of the high end of the range would be about 4,100 on the S&P cash by the end of the year. So there's not a whole lot of upside to the upside, but I think there's a lot out here that would make us think and look at a market where every time they try to sell something off, people are probably going to buy it if it is worth something. And by worth something, I mean you can put your money into it and you don't think that it's going to be worthless come Monday. And we can see that with people trying to drive into the Dow stocks this week. They're all looking for a faster horse. And what they want is stocks with a lot of cash. They want a mountain of cash in case everything goes to hell in a handbasket. So we're going to probably continue to see the Dow at the leadership position, probably followed by the S&P 100, the S&P 500, and then maybe the NASDAQ. I have a feeling that while you might have some initial moves on short covering, more problematic. Crude oil's down a little bit today. That was a bit of a huge, the last of the big push from the Strategic Petroleum Reserve. So watch that next week. My guess is the prices on crude are going to really firm as everybody eyes the end of the move of pumping oil into the system from the Strategic Petroleum Reserve. And you know what? Being long energy, it makes it a little easier to see those painful prices at the pump. Gold's off 21. Of course, everybody, they don't make a lot of money on their unless they're a gold fund. So time to sell everything. Throw it at the big guys at the market. Try to get the indexes up and get your bonuses higher. Let's do a little history and then we'll move on.
It's all just a little bit of history repeating.
On this day in 1998, the U.S. President Bill Clinton signs into law the Digital Millennium Copyright Act. The law was intended to criminalize production and dissemination of technology designed to circumvent digital copyright protection, known as digital rights management, or DRM. However, the law has been very controversial and not just accused of abuse, it has been used a great deal. The only thing, and the only reason you don't hear a great deal about this anymore, is that there is a provision if you make a false claim of at least $1,500 per claim. So there's been a lot of class action lawsuits against these companies that willy-nilly have been accusing folks of digital rights management issues. And that's why you really just don't hear much about it anymore. But it still is an issue with some folks that haven't got the memo on YouTube. So YouTube shuts down your channel, says that you did something wrong when you use 6 seconds of a song, which is pretty much, Supreme Court's ruled on it about 10 times. It is, 6 seconds out of a 2.5 minute record is not going to kill the sales of some record. But it's been used for a lot of evil. It's slowly, over the years, about 24 years later, been slowly neutered by attack after attack by folks that have been on the short end of the stick on this. But we're probably due for a lot of cleanup on aisle 3 when the Supreme Court starts ruling, probably in the spring, on a lot of these areas around digital content, free speech. There's a lot of these actual cases before the Supreme Court now. So we're probably going to see the biggest revamping of this and probably the neutering of somewhat of the DMCA. And that's kind of it. So let's take a look at it. So let's see what we have here. Let me update. We're up 82 points. I've had a lot of people ask me if we're going to get a pullback. I don't think we are. Today, not eventually, but maybe we get something on Tuesday when we look at the Fed. But my guess is as soon as the Fed's done, any money that was sitting on the side is going to come in. So what you want to do is start looking at, if you want to trade for Wednesday, start looking at what everybody has probably been buying today, which for the most part are the biggest names with the biggest bags of cash sitting around. We'll be back in a minute. Anybody in the den have anything when they want to have me look at? Make sure and drop something in there. But we'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And the first thing we're going to do is take a look at the USO for the G-Man. And what do we have? We've got some nice lower highs and higher lows. So we don't have much. And, of course, what are we doing? We're just waiting for the spigot to be turned off on the SPR. It's about done anyway. So I don't know how much longer they could continue on anyway. Of course, they doubled the amount of that 2 weeks ago. So I think it's when that does shut down, it's going to be double. But, you got to think that the first month after that's gone, $20-30 on the price of crude. I think that's probably fairly good. We've got a president that continues to insult the only folks that could really add a huge amount of production. So we've got that going for us. And again, you don't want to grumble at the pump, probably just buy a lot of energy stocks because it's very hard for me to see that anything's going to drastically change. Of course, on the 8th, we have the election. I've got a lot of people asking me if they think that the market is sniffing it out. I don't think so. I think that if anybody was being honest, they kind of know that what the results of the election is going to be as far as the House and the Senate. Could that depend on how big a majority ends up in the Senate? I think you could. But I think that's kind of already baked into the market for the most part. I don't think a lot of people, there are a lot of people spreading disinformation about what the polls actually say. But you notice as the election time comes, they start to really change their tune over the last week or so, back to a little bit of reality. So we shall see that. So I think that's already baked in the market. And of course, if you're fairly smart and on Wall Street, you haven't been listening to those people that have lied to you over and over in the past. You probably even have access to the raw data yourself if you're on Wall Street. And you probably know the score already. The question, can it matter on the edges? Yeah. But the markets love gridlock. They love it, love it, love it. All they would love to know is that the sand they're standing on is not just going to wash away with the next political whim of either party. So, yeah, I think it's a positive, but I think a lot of that's built back in. I think the bigger thing is, does Powell get a little bit of weak and become as fold as easy as a suitcase? I don't think so. I think the more you hear from him, the more he wants to be looked at and revered like Volcker. So I don't see a lot of weakness in him. I also don't make a lot of bets based on what one man is going to do, because you never know what happens in behind closed doors. So I tend to stay away from lots of risk based on what one person will do. But when it's the entire market, I look a little better. So I think actually Thursday is probably going to be the big trading day. Maybe the end of Wednesday even gets it started. But the trend probably to the end of the year starts on Thursday next week. For USO, you just got to kind of stand around and wait for the spigot to slam shut. Like I said, I'm going to say $120 for a barrel once everybody recognizes the SPR pipeline is done to the overall markets. Okay, got anything else? Yes. Let's go through and see what some of the earnings were like. I didn't get that. Where's it at here? Come on, there we go. And we'll go through these based on the change. Of course, Amazon was down about 20% after hours last night. I think a lot of people, this is the one I thought would be the weakest based on other earnings coming in from Microsoft and Google, in that the cloud systems are starting to be fairly weak. You did blow out the previous lows. You did get to 97.66. You've done that with extensive amounts of volume. That means you're probably coming back to that low. That may be after the first of the year, though. As I said, I continue to think in some way we're probably going to just stumble up into the end of the year. Now, we'll have a lot of days like yesterday and last night and back. We're going to have these big wide swings and make it just about impossible to go after any kind of trend without stopping out. But we'll have good trading during the days. Anyway, it's back into the trading range. You probably have a short-term selling climax in Amazon. You've got Christmas coming up. They'll probably be okay. But my guess is it's going to bounce a bit and then come back down. Also on the short end of the stick, oh, okay. Somebody asked, we play the loser horn for Amazon, as it is the biggest loser. Okay, and what else do we have? We've got Valley or Vail, depends on which country you call. I've called 3 different countries. They all pronounce the same company name different ways depending on which country you actually call, because I've heard it so many different ways. Valley, Vail, everything else. Anyway, nice gap down. Certainly looks like that mid $11 range that we've seen a couple of times before is probably in line. And maybe that's just higher interest rates along with the kind of standard stuff that everybody's been talking about. But I don't see anything changing here anytime soon, or at least before the beginning of the year. SK, what is that? YW. And this is SkyWest. Just came back down and tested the gap lower. Volume's fairly good. It's hard to not think that these airlines are going to be facing a lot of wind ahead as that SPR energy quits flowing. JK Solar, take a quick look at that. Kind of interesting to see solar stocks a little weaker, but not the end of the world. Not very much volume in Jinko Solar today. We've got U.S. Steel down about 4%. Pretty easy bet to take that they're going to be weak as interest rates go higher and car sales go lower. They also have a lot of cars already built that are going to need to find the roads, especially Ford's F-150s. Okay. What else do we have? Deckers. Take a quick look in the shoe department. Yeah, I mean, I don't think there's anything else here that's a big mystery. We're through the summer. These tend to be a little weaker during the winter, but not the end of the world or anything else you can make about it. When we come back, we'll start looking at the ones that are positive on the day. We've got a bunch of them. Some were a little stronger after earnings last night, and now just barely above. Anyway, be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
First solar up about 1.5%, but not a big deal. Just a spinning top out here. Can't read a lot into that. XOM, big company, makes small moves, but nice day. Got solid breakouts in these. I would have liked to see a little bit more juice in these, but like I said, I suspect that we're going to have one huge day. And that's going to set the top energy for a while, but we haven't seen that. But I want to see what I'm suspecting is probably a $5 move in the XLE, and that will tell you that you've probably gotten somewhere close to the top and gotten some kind of buying climax out there. I'm not exactly sure. It'll probably be some kind of news or something. Problem in the Mideast. We've never heard about that before. But there'll be something out there, maybe the announcement of the closing of the SPR once the election's over. But kind of all that stuff, put it back together. Also on the move to the upside is Capital One Financial. Looks to me like it's come right back up to resistance. That resistance is on like 3.1 million shares from the downside on the 13th of September. When this gap down, now you're coming back up to it with about 2.7. So could you get back up to 110? You probably could. I have a feeling that it'll move a lot more after Fed. Charter Communications, CHTR. There's also another one. Let's see. There we go. Okay, so what do we have on this? Charter Communications. Well, you got a nice day out here. This thing's not going to ever move that much on earnings unless it has some kind of blowout or major failure, but I don't see much in that one either. Let's take a quick look at knee. Next, energy. Nice move. My guess is this is going up to about 82.50. There's a little gap and a doji back here from the 5th of October. Let's get a little bit more to run on that. T-Mobile, also a little higher today, up about 7%. This takes you through and is a valid breakout. I was a little bit more sanguine on the futures of these companies because they're spending lots of cash, and that's a real no-no. Just ask Zuckerberg over at Metamucil. But you've blown through the 150.20 high. That's the July 16th, 2021 high. That had 3.3 million shares. You got 9 million shares today, and it looks like, well, let's see what here. What do you got? 150.71, and you need 150.20 for a close. To put the door on that. But, you got a bunch of gaps there. Can this be a buying climax? It may be, but my guess is that 150 will be support. So unless the entire market ends up blowing cookies, not a problem. Apple, of course, the big one out here that I was hunting this morning in the newsletter because of so many shorts in it. Also, the way it acted last night, it got to like 139, 138-ish, and then went right back to about 144, 143 during earnings. And when everybody came in this morning, there is one stock that you can buy that's literally in everything to drive a market higher. So the simplest thing to do was throw all your money at Apple, and the rest will have to cover. But there were a lot of people short already. Apple has a lot of money to buy back its own shares. They wouldn't have to buy back that many today because all the short sellers out there that have been on it for the last 5 days. So it's the easiest way to move the market. The next resistance level is 162. My guess is we're probably going to see that on Monday or Tuesday morning, somewhere around there. So we're probably going to get one more big jump in that one. That could bring us up to 39.50 or so on the S&P cash fairly easily just by itself. But my guess is we're going to have a lot of people totally committed to the bear side before it's really getting any kind of signal, and that signal is probably not going to happen until Wednesday. So anyway, 162.50 is probably where fairly decent resistance resides. Let's see here. Go back and look at this. Intel also heavily shorted. Another one out here and it's up 10%. But as they say, a dead cat bounce up into the resistance levels. And this is just from way too many people. Could have bounced to 3150 or so. I think that's where resistance is. They do have a few products. They are fairly competitive, but if we're talking about some kind of run back up to 38, hard for me to see. They continue to fail at almost every front. Now, eventually they'll quit failing, but I haven't seen them do that yet. They do have a nice chip, but it's probably going to get blown away by AMD's new chips that'll be out, I think, the second week or first week. I think it's around the 7th of November that they're going to show those. And those are the current chips, but with much bigger caches in them. And if you're unfamiliar with that, when you buy a processor for your PC or your server, generally they'll have 3 levels of caching. And that is to try to keep as much data as close to the processor as possible so it can do stuff. So if you have a kind of a small list, that's probably going to be moved up to the smallest cache that's closest to the processor. Then you have a second one that's a little bit bigger, probably twice or 3 times as big, and then that's fairly close. It's kind of like being right downtown on Main Street and then maybe over one, and then you kind of maybe even over a couple of streets for the third cache. And then it's kind of like being in the suburbs when you talk to general memory in the computer and or the hard drives or so. Anyway, AMD's got a very nice new system for handling those caches that should add amazingly a lot of speed to those. So anyway, just kind of an inside day on AMD. No big news there. NVDA, and if I actually type it correctly, NVDA. So not a lot of news there, but what can I say? Just a little bit bigger day out here for NVIDIA off the lows. Resistance is about 145. I expect that's what we're going to see in that. When we come back, we'll go to David's request. Will Chipotle head back down to fill the gap on July 27th? Take a look at that as we return, like Sherman from the sea.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, get ready to wrap up this hour, well, we're right at 3,900 on the S&P cash, and the volume's okay. Of course, as we said earlier, probably another up day on Monday, Tuesday, and Wednesday. We got the Fed, so look for light and variable volume, maybe a little bit of a pullback on Tuesday into the Fed. But, yeah, we've got kind of a confluence of fund buying, everybody trying to drive stocks up for the best part of the bonus that ends for most of everybody that works on Wall Street on October 31st. And just all the regular stuff, and probably too many people short. Especially that's the way I looked at it as Apple. Question on Chipotle, will it come back and fill this gap about 1350? My guess is it probably could. Right now, you had a lot of volume on the downside 2 days ago. Not so much today. My guess is this: if it's going to go break that, it's probably going to break it late on Wednesday or Thursday next week. Support should be very good, though, back around that 1370 level. So you've got plenty of time to get to your options on the 18th, but you'll know late next week. I probably wouldn't be sitting around with options just decaying. I'm not a big fan of that. Like I said, if you were looking at this, I think a better plan is to probably sit out until the Fed on Wednesday. I think we're just going to have a lot of back and forth Tuesday and Wednesday. So that's kind of it. Anyway, we've got Tom coming up here to close out the day. Not a lot else to really say. Just look for the normal organic factors driving this market, which are fear and greed. And right now, it's the greed of many on Wall Street with a little dose of fun buying thrown in over the next couple of days. And then we're going to get a Fed chaser on Wednesday. So look for next Thursday to be the next big trend start. That's it. Have a great weekend. I'll see you Monday. Sell when you can, not when you have to.
Building wealth trading in the stock market seems impossible.